All right, welcome everybody who's joining. We're just going to give it a couple of minutes for everyone to get settled. Appreciate everybody taking their time today.
You see the screen okay, Thomas?
Yeah, it looks great. Thank you. For those of you joining, thank you. We're just going to give it another minute for everyone to jump on here. Okay, well, we'll go ahead and get started, given everybody's time. Thank you so much for joining us today. I'm Thomas Barr, Vice President of Business Development at Local First Arizona, and we're excited to be pulling together this workshop and informational session today for businesses to inform you about employee retention credits. We are always at Local First Arizona looking for informative opportunities to make sure that you are made aware of grants, things that will help your business, pull money into your business to help you thrive and keep moving forward through the challenges brought on by the pandemic. And so today we have two special guests that are going to give a brief overview of the employee retention credit opportunity for small businesses. But honestly, this is going to be an open opportunity for anybody joining to ask questions and get as much information that you'd like regarding how you can take advantage of this. And so if you have any questions, you should have access to the Q&A box as you're logged into Zoom here, and you can submit a question at any time, and I will field them for our presenters here. They will present for about 15 minutes or so, and then we'll go ahead and launch into questions at that time. So you can drop them at any time during the session. And afterwards, we will send out a recording of the session today to everybody and connect you to the two presenters as well in case you have any additional questions after today. So with that, I want to introduce Stephen Harris, partner of Local First Arizona with Journey Payroll. They are a great partner in the Phoenix area, but help small businesses all over. And he's going to start us off with Sean Smiley from Profitopia, based down in Tucson, but again, also helping small businesses all across our state. So I will give it over to them. Stephen and Sean, thanks for your time today. And we'll go ahead and get started.
Awesome. Thank you so much, Thomas. We appreciate the opportunity to present on the employee retention credit here today. As Thomas mentioned, I'm one of the owners of locally owned Journey Payroll and HR here in Phoenix. And this is obviously a topic that ever since last year, with the different acts that went into place, there's been a lot of moving parts, a lot of updates and whatnot. So we're excited to present that. And I've also got Sean Smiley with Profitopia, who's a partner of Journey. who really helped streamline the ERC for our clients, and a little bit more of a tax strategist expert in this area. So between the both of us, hopefully we're able to answer the questions that you guys have today. All right, so we'll get started. So just a high level, what is the ERC? You may remember, it seems like a long time ago, or what happened in 2020, originally enacted with the CARES Act through the end of 2020. So if you remember, there was multiple points to the CARES Act with the PPP loans. ERC was one of those things, as well as the EIDL loans and grants and things like that. Well, at the time, ERC, the Employee Retention Credit, wasn't really a hot topic because of the Paycheck Protection Program that was in place. So this was actually updated and extended through 2021, essentially designed to help small businesses keep their staff employed. If you retained your staff, you kept them on payroll through the COVID-19 pandemic in an effort to continue or to make sure that they're not on unemployment and things like that. The IRS is issuing payroll tax credits or wage refunds for a certain percentage up to a certain amount for the businesses who qualify. All right, so basically the way it was calculated is if the credits were more than your federal withholding, Social Security, Medicare tax, and your total 941 tax. It's a form that you file every quarter, or your payroll company does, or your bookkeeper. If the tax or the wage refund exceeds that amount, then the IRS would essentially issue you a refund check on a quarterly basis. All right, so in 2020, the rule stated that if you had, if you were eligible, they would issue a wage refund of 50% of wages paid up to $10,000 per employee. In other words, if you paid someone $10,000 throughout the entire year of 2020, dating back to February 15th, 2020, they would issue a refund of $5,000 per employee, which was a nice chunk of change. I mean, that was fantastic that that was built and that was available for employers. But in 2021, they kicked it up a notch, and we'll get into who was eligible and what they did. But in quick short terms, they upped it to 70% of wages paid, up to $10,000 per employee per quarter. So instead of $10,000 per year in 2020, they extended it to 2021 to if you paid $10,000 to an employee per quarter, essentially a $40,000 salary, they would issue a wage refund of $7,000 per quarter. So if you qualify all the way through the year, that would be a max wage refund of $28,000 per employee that you're paying $40,000 or more, as long as you qualify. Anything to input there, Sean?
No, I think you did a terrific job explaining the basics, Stephen. I'm
All
sure
right.
we'll have some questions come through.
I'm sure we will too. So we'll get into the high level who could be eligible. Now, again, this is what Profitopia does, is what other CPAs do. They dive into your business, they figure out who's eligible based on multiple factors. So don't let this slide be the end all be all. But just in a nutshell, the nice thing is if you receive the Paycheck Protection Funds, you are still eligible for the ERC. Originally, when the law was enacted, you could only choose one or the other. You could only choose the PPP loan, or you could choose the ERC. Most people chose the PPP. So now with the new law that went into effect at the end of last year, they extended it and allowed it to be eligible for both. Okay, the only thing that you have to do with the ERC calculation is you have to exclude that PPP period. So you can't double dip. You can't take the PPP funds and then use those wages paid to your staff as part of the wage refund calculation. But you are eligible to have both. All right, so if you had a business who experienced full or partial government ordered shutdown during the pandemic, it could be a short period of time or a long period of time. If you were forced to shut down or partially shut down, you could potentially be eligible. Okay, just on that fact alone. The most common fact that we're seeing with the ERC, you're eligible based on your revenue or your gross receipts. In 2020, the 50% wage refund, if you had a 50% reduction in your revenue when compared to the same quarter of 2019, you would be eligible. In 2020, with the extension, like I said, they kicked it up a notch. So now if you show only a 20% reduction in your gross receipts per quarter, the same quarter 2019, and I think, Sean, you can get into a little bit more detail. They can also use the same quarter in 2020, I believe, or the retroactive quarter. A 20% reduction in gross receipts would qualify you for a 70% wage refund on employees paid during that quarter, up to 7,000 or up to 10,000, right? 70%.
Right.
Okay. Now, so this is where I was talking about the quarters. In 2021, employers that did not exist in 2019, you can use the corresponding quarter in 2020. One of the things that is huge now, when we first did this webinar back in, what was it, May, I think this is our second rendition of it. The startup recovery provision was fairly new and not often talked about, but this is something that Sean and I definitely wanted to highlight. You could start a new business after February 15th, 2020. And if you're a small business, revenue is less than $1 million, you are now eligible for the employee retention credit for Q3, and I believe it's through Q4 still, correct, Sean?
Yes.
There's some things going on in with the government that Q4 may fall off, but as of right now, Q4 is still in the play. Subject to a cap of $50,000 per quarter, you would still be eligible for that 70% wage refund. All right, so I know I went through a lot of numbers there, but Sean, I would love for you to jump in on the startup recovery provision. It's a really neat strategy for businesses who started after the pandemic that helps them grow their business during the pandemic.
That's exactly right. So much of what we've done is actually consulted and helped a lot of businesses be able to leverage this for their growth. So here we are, obviously September just started up, but we're still here in the Q3. So some businesses are using, they know they're going to qualify for this, and they're able then to bring on new employees, knowing they're going to get 70% of that wage back, up to the $10,000 per quarter person. So it's a great strategy to be able to bring on new people as you're ramping up and growing.
Yeah, absolutely. I actually have just a quick story. I have a friend who's started their business after the pandemic. They're signing a new lease, moving into a new space. They have not hired anybody yet, but I told them if there is an opportunity to hire your manager sooner rather than later, there's an opportunity that wage refund could help you grow and build the foundation as you start your new business. So there's a lot of strategy to that. It's available, and that's what these guys over at Profitopia, they specialize in. So quick example before we get into the Q&A. Just to put some numbers in here, if you were an existing employer and you had a 20% reduction of revenue in each quarter of 2021, compared to the same quarter of 2019, the IRS is going to pay 70% of wages up to $10,000 per employee per quarter. You're a dental office, you have 10 employees, you have still a slowdown in your revenues based on the COVID pandemic, 20% reduction. You qualify, perfect world, qualify for all staff. $7,000 wage refund from the IRS per employee per quarter equates to $28,000 per year. Multiply that times each employee, so 10 employees, there's a wage refund of $280,000 that the IRS would give it you back in tax credits or refund to add back to your business because of the revenue loss that you incurred. All right, so the way to do that is you file the ERC amount with your federal form 941 for each qualified quarter, along with the form 7200, which is the accelerated refund request to the IRS, because everyone knows that everything is backed up, including the IRS, even more so than they've ever been. But filing that 7200 does help a little bit, and you can get that check back, that refund check back, to add to your bottom line and continue growing your business. This is a huge program that we're still finding a lot of small business owners do not know about. And so Sean and I and Thomas at Local First spend a lot of time talking about this in the Phoenix and Arizona, Tucson community, all across the state, because this is a great way to take advantage and gain tax credits back to continue building your business. So I'm going to leave it at that. There's your high level on what the ERC is, who's potentially eligible. I would imagine we probably have a few questions. So if Thomas, you want to help facilitate that for us, that would be awesome.
Awesome. Thanks so much for giving the brief overview. And yeah, like we mentioned at the beginning, the really important piece of this is getting questions answered. So we wanted to give that overview, but leave a lot of space for that as we've had experience in the past. So we've had a few start to come through already. So I'll go ahead and launch into them. The first one is, I was forced to shut down and my employees received unemployment. Am I still eligible for this?
So the qualification is based off the gross receipts and or the shutdown. To actually, so that would, there's kind of a two-step calculation or process to figuring out your credit. The actual credit you would receive if you qualify is going to be based off actual wages paid. So let's say you shut down, for all of Q3 last year and had no wages paid. So even if you qualified based on your gross receipts, there would be no refund because you didn't have any wages paid. Does that make sense?
Yeah.
So if you qualify and you paid wages, that's why this program exists. It's a reward, as Stephen said, to businesses who kept their employees on payroll.
Great. Thanks. And for someone who, the person that submitted that, if you have any follow-up questions, we of course will send contact information afterwards if you want to dig deeper into that. We have another question here. In Arizona, the shutdown and social distancing restrictions were lifted at the end of Q1 2021. For the other quarters, therefore, the only way to qualify is to show the reduction in gross receipts. Is that correct?
So one of the things that our accounting team often answer questions with is it depends. So we obviously want to get specifics with a specific business owner. The shutdown orders have to be from someone like the governor, local county government, or a mayor. It can't be based off of CDC guidelines. So I put that in there as a qualifier. And then remind me the rest of the question there, Thomas.
For the other quarters, so they're saying, you know, restrictions lifted.
Yeah. So
is the only way to qualify to show the reduction in gross receipts?
Yeah. So the shutdown. So restaurants, for example, had a period of time where they were mandated by Governor Ducey to have their dining room completely shut. They could be open for carry out and delivery. Once those were reopened, they were at 50% capacity. I believe it was through March 5th of this year. So there's still some specific analysis that our firm does to document for our clients. We call it an audit ready package. So we want to be able to give them proof to the IRS in the unlikely event they did get audited. They can document, this is why I qualify. So in a broad sense, if they were shut down from, let's say, last March to this March 5th, they likely will qualify for that entire time. And then the answer to the question is, then after March 5th, the only way they could continue to qualify is based off that gross receipts test.
And just to follow up on that, one thing I didn't mention that I think is also important, if you feel like you missed the boat in 2020, there's still plenty of time. You can amend your quarterly 941 tax return for up to 5 years. So if you qualify in 2020, we can send in an amended return and request that wage refund if you qualify for other quarters.
That's correct.
Great. All right, next question. Someone's asking, they were forced to shut down too. Is how would you go about applying? Is there a link? Who do you contact? How do you do this?
So our firm here at Profitopia, we've got an entire team of people that specialize specifically in ERC. So you can certainly talk with us. We're not necessarily the only place you can do it. It's possible that you could do this on your own. You may have another CPA firm that you work with that can do it. The difference with us is our real specialty is in tax credits, and specifically here with ERC. So we'd be delighted to talk with you, verify if you qualify. I often talk with clients and explain they can certainly get a credit on their own, but they likely are not going to know all the nuances. And there's a better than average chance they're going to leave money on the table if they don't know what they don't know about the program.
Sure. Yeah, I think one of the main things here is it's not like there's just a portal online and businesses go apply like you would apply for a grant or something. You need to contact a professional to get the most out of this that you possibly can. So we highly recommend that.
Our goal at our firm is to maximize the credit that they receive. And there really are a lot of nuances to this law. There's a lot of detail that it would be tough for an individual business owner. It'd be easy for them to submit for this and get a credit. It'd be tough for them to maximize that credit.
Sure. Thanks, Sean. Next question we have come in, very specific. So if in Q2 2020, when we were forced to close, is that, sorry, it's written a little odd. Do I have to compare gross receipts from Q2 2019? Would that be the 50% reduction? So I see what they're saying. They're saying if in Q2 2020, when they closed, are they comparing that to Q2 2019 to show a 50% reduction?
That's exactly right.
Okay, great.
And it's a quarter by quarter comparison. So we have clients, for example, that qualified in Q2 and in Q4 of 2020, but didn't qualify in Q3. And as Stephen pointed out, the way the law was written for the 2020 ERC credit or the ERC refund, it's a maximum of $5,000 per employee for the calendar year. And then as he highlighted for Q1 and Q2, well, for all 4 quarters here in 2021, it's up to $7,000 per employee per quarter.
Great, thank you. All right, the next question is, are owners of businesses' wages eligible for employee retention credits?
Great question. And this was actually just answered in a formal way by IRS guidance that came out a couple of weeks ago. There was a lot of forums online that our accountants follow. And that question was, people tended to be leaning toward the owner's wages did qualify. The IRS came out again a few weeks ago and issued guidance that said really unequivocally, the owner's wages don't qualify. And again, I have to add in the it depends. So if an owner and their spouse own 100% of the business, or they each own 50%, they wouldn't qualify. But if you have multiple owners that are not family members, so let's say, Stephen and I owned a business together, we're not related, then our wages would qualify if we were both 50-50 owners. So if an owner owns 51% or more than 50%, then their wages and their family members' wages don't count. And there are a lot of unique things, so we really do have to take it on a case-by-case basis. So let's say you have 3 brothers that each own a third of a business. That's not going to qualify. So we need to look at the specific cases.
Got it. Great. Next question coming through is, we had a lot of small businesses that received PPP loans, a wide number of businesses. Are those businesses eligible for the employee retention credits?
Yes. So when ERC first came out, as Stephen pointed out in the CARES Act, the law was written so business owners had to choose between them. And in my experience, everybody chose PPP because it was easier and there was more money. In December 27th, they amended that law and now said you could do both PPP and ERC. They extended the money through the end of June of this year. And then earlier this year, I think it was in April, Biden signed in the American Rescue Plan Act. He signed that into law. And that extended the monies through Q3 and Q4.
Great. The next one is, a lot of businesses are shifting in and out between having staff, not having staff, especially a lot of our frontline businesses. So for if a business would have qualified in, let's say, a previous quarter, and the employees that they met the qualification with are no longer with the business, can they still access the ERC, the employee retention credit, for that case?
That's a great question. So this actually comes up pretty frequently. So the qualification that we do, again, it's how the law is written, is quarter by quarter. And then let's say somebody qualifies Q2 and Q3 of 2020. We're going to go back and look at the 941 payroll reports for who they paid during the quarter in which they qualified. So let's say they had 12 employees in Q2 and Q3, and now they've only got 4 because they've had to downsize. We're still going to get the ERC calculated off the 12 they had during the quarters where they qualified. Does that make sense?
Yeah, I think so. And if Yeah, go ahead.
And then the other question that kind of related to that sometimes comes up is, well, you know, I had 12 people before and I still have 12, but they're not the same 12 people. That's okay too. So I think the question comes from a little confusion of the name says employee retention credit. So it's not that you have to retain the specific individual. The idea was you're continuing to keep people employed through the pandemic.
Got it.
And one clarification to the previous question about PPP, Stephen kind of touched on this on the slides, but I just wanted to go back and highlight this. You can't, no one can pay the same wages twice. So let's say you have a $10,000 a quarter employee and you pay $4,000 of that $10,000 using PPP money, then we're going to calculate the ERC credit based off the remaining $6,000 that you paid that wasn't covered by the PPP loan. And we do that employee by employee, payroll period by payroll period for the quarters in which the business qualifies.
All right, next question coming in is, can we file this now, going back to Q3 2020 to Q2 2021, so that we have 4 quarters?
I'm not sure exactly what they're asking, but yeah, so there's a 5-year look back period on this. So if a business qualifies in any of the quarters last year or in any of the quarters this year, we've got up to 5 years to go back and file to claim the credit. So I wouldn't encourage anybody to wait. There's no reason to wait. You know, but it's not, there's no penalty for not having done it right away on a specific quarter when you qualified.
Got it. All right, next question we have here is, are businesses that opened in 2020 eligible for the credit if they are part of an aggregated single employer that met the reduction in gross receipts?
So I'm not sure exactly what they're asking. The way the recovery startup was written is, if a business started its operations February 15th of 2020 or later, then they'll qualify for Q3 and Q4 ERC this year. So there'd be no funding that they get for 2020 or the first half of this year. And there was something in the question there, Thomas, about, was it single owner, or how did they word it?
It sounds like it may be a situation, and I'm not sure if this individual wants to provide more context in the chat box. You're welcome you can send a message to us, but it sounds like a business may have branched off from another entity that they're still possibly associated with, and that entity has those gross receipts. Essentially, I'm getting from this, can they use those gross receipts from that entity they're associated with now on their own to qualify for it? It doesn't sound like it, but maybe, I don't know.
So one of the things that anyone who's applying for ERC needs to be aware of, it's certainly one of the parts of the service that we offer, is we have the law is written so any business applying for ERC has to document if they're part of what they call a control group. So the IRS treats a control group. So for example, we have a client that owns multiple restaurants. They're 3 separate entities, 3 separate LLCs with separate EIN numbers, separate payroll, separate employees. Because this individual owns all 3 restaurants, we had to look at that as if it's one entity. That's how the control group works. We have another client that sounds like maybe a similar situation to what you're talking about, where they had a restaurant that existed for the last 10 years. And just about 2 months ago, they opened up a second restaurant. So that second restaurant is not going to qualify for the recovery startup because the common owner had a business for the last 10 years. So his new business becomes part of a control group, and therefore he's ineligible. And I would highly recommend that anybody listening to our answers, whether it's live today or on a recording, every case is unique, and consult with us, consult with somebody, get expert advice on your specific situation.
All right, next question we have is kind of asking about the process. So the business's payroll company files their 941s and state filings. So presumably they would work with a company like Profitopia to determine whether or not they're eligible and to what extent, and then work with their payroll company to actually make the revised filings.
They could. So what we do is we provide the turnkey service. So we'll be the liaison to help determine your qualification, work with your payroll company, and a lot of the expertise that our team has is looking at those 941 reports and leveraging that against how the law is written to maximize the ERC refund. But yeah, in a sense, there's a qualification step based off gross receipts. And then the next step is looking at the 941 payroll quarter by quarter, employee by employee for the quarters where you qualify.
Got it.
To file the amended 941X.
Stephen, did you have something to add?
Yeah, I was just going to say, so when this first credit came out, we looked at the complexity of how the credit's calculated, right? So we partnered with Sean and Profitopia. We file the 941 taxes, file the tax returns and all of that. But once the credit is found, as Sean stated, they can file the amended 941, or if preferred, they could also tell us the amount and we can file the 941. So working with payroll and the CPA or Profitopia or whoever, you got to have both. I think the whole point of the webinar is the complexity of it to maximize your credit is making sure that you find that person that can make sure you're eligible and maximize it, and then work with the payroll company so they know what's going on.
All right, and then
Great.
Last one that I have here is business is trying to confirm they're just a business. Two people, two spouses own the business, and their two children work for them. Trying to confirm whether or not they might qualify, or if they should even look into it.
I'm sorry, say that again. I was reading one of the other comments. So
two spouses own the business,
right?
And they employ two of their children. Will they qualify? Should they be looking into it, or are they, not going to qualify based off that?
On the surface of it, it sounds like none of them would qualify. It's owners' wages and their families. I would encourage them to at least have a conversation with us or have a conversation with another professional about it, just to double check. But it sounds like they wouldn't qualify.
Okay.
And I was reading one of the comments.
Yeah, go ahead.
About I think this is the one I addressed a little bit ago about existing business. This one says that company A was started in 2015. Company B started in Q3 of 2020. Both owned 100% by the same person. So the question is, if combined together they had a 50% drop in Q3, could they get ERC for company B? The way that's written, yes, that control group is either the whole control group qualifies or none of it does, is how it works.
Great. All right, next one that came in is, if a business was started November 1st, 2019, the quarter comparison would be partial. Recognizing this, would we be able to compare gross receipts into January 2020 for a complete quarter?
I guess I would have to defer that to one of my team experts. I'm on our sales and customer service side. I'm not an accountant or a CPA, just so everybody knows. So there are often questions that come up where I've got to defer it to one of the experts to look at. In general, it's a pretty strict interpretation of the quarter is based off the dates. But there are, again, the details in these laws that are written for those unique cases. So we'd really just have to look at that as a specific case.
A little deeper dive on that one. Okay.
Right.
Great. Well, we don't have any other questions coming through. So kind of a last call for our attendees. If you have any other things on your mind, if you want to submit them through right now. But Sean, Stephen, thanks for your time. Do you have any last thoughts as we ask for last questions here today?
One other question that's coming up a little more frequently now, depending on how closely people watch what happens in Congress. many people have heard there's an infrastructure bill that's being voted on through Congress and Senate, and a lot of press about that right now. So in April this year, when President Biden signed the $1.9 trillion for the American Rescue Plan Act, that allocated money for Q3 and Q4 of this year for the businesses that qualify for ERC. And part of what they're considering in this infrastructure bill is removing the funding for Q4 for ERC and allocating that money toward infrastructure. So that's still up in the air at the moment. We're moving ahead as if Q4 is still, businesses can still qualify and therefore get the employee retention credit. And we'll just have to wait and see what happens with that new legislation.
Great. And looks like we got one last question on here before we end. Individual asking says they own half the business. They're not related to the other owner of the business, and the daughter works for the business, and they're both on salary. They have 3 additional employees that work for the business that are not related to them. Would they qualify at least for the 3 employees that are not related?
Yes. And again, I can't give them with a certain answer, but the way it's described, likely both owners would qualify their wages also. I'm uncertain if the daughter's wages would qualify. We'd have to look at that specifically.
Great. Stephen, anything to leave the attendees with today?
No, I just want to thank you guys for jumping on. And at the end of the day, we just want to put some information out there, get you guys introduced to the ERC if you hadn't heard about it before, and definitely reach out to the experts in your network that may or may not know about this and just get some questions answered. Feel free to reach out to myself or Sean, and we can dive into it further. But Thomas, thank you again. Local First is amazing. You're amazing. Appreciate the opportunity to jump on and chat with the members.
Awesome. Thank you, Sean. Thank you, Stephen, for those attending. We've recorded this today. We have everything captured, and we're going to send a follow-up email with both Sean and Stephen's contact information if you'd like to get in touch, and you'll have a copy of the recording as well. So thank you everyone for joining today, and we'll go ahead and close out from here. Have a great day.